Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock, with news both monetary and fiscal policies in the largest economies seem not to be working. In Frankfurt, the ECB has lowered the interest rate on its deposit facility by 10 basis points to now minus 0.5%, but left all its other benchmark interest rates unchanged. This is as markets expected. In addition, and more importantly, it has restarted its QE program. Will make bond purchases at a monthly pace of 20 billion euros starting in November. This is a pretty modest restart, but important all the same. Continuing insipid economic growth has been their trigger. In fact, as they met, Eurozone industrial production for July came in 2% lower than the same month a year ago, and their capital goods component fell by even more. In fact, EU countries are the laggards in the G20 data released by the OECD today. That review has held back by US and Japan as well. The countries with rising expansions included Canada, China, Indonesia and Korea. In the US, consumer inflation came in at 1.7% in August, and that was a bit less than expected. However, core inflation rose to 2.4%, and that is a one-year high. Most observers expect the Fed to turn a blind eye to this and cut their benchmark rate next week by 0.25% to 2%. And in a landmark event, the US federal budget deficit widened to more than $1 trillion in the first 11 months of the fiscal year. The first time deficits have topped that mark in 7 years, and the first time ever in a non-recessionary period. It came much quicker than expected. The 11-month outcome is 36% worse than the full 12-month 2018 result. That means it has jumped from 3.7% of GDP in 2018 and now breached 5% of US GDP, and there's still 1 month to go. At some point, markets will notice the risk. Tax cuts for the rich haven't worked out in the way they were sold. But today, they're ignoring it and noticing the ECB. QE juice has markets on both sides of the Atlantic up about 0.6% today. Yesterday, Asian equity markets in Shanghai and Tokyo rose 0.8%. Also encouraging equity markets are more conciliatory tones in the pre-positioning ahead of October trade talks between China and the US. There are reports the US administration is trying to find a face-saving exit plan. The US Treasury 10-year yield continues to rise, up another 2 basis points today and now at 1.79%. Gold is again higher today, up $4 to $1,499 an ounce. US oil prices are lower again today, and now just on $55 a barrel, and the Brent benchmark is down to $60 a barrel. And the Kiwi dollar is unchanged at 64.2 US cents. On the cross rates, we're softish at 93.4 Aussie cents. Against the euro, we're lower to just under 58 euro cents, but that has the trade-weighted index down to 69.4. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.